आप सभी का स्वागत है पहाड़ी ट्यूटर चैनल में। मैं हूं अक्षत बिस्ट। जैसा कि आपको पता है, हमने इस चैनल पे इंडियन कॉम्पिटिटिव एग्जाम के लिए होलिस्टिकली प्रिपरेशन स्टार्ट की है। जैसे कि आपको पता है, इससे पहले हमने अपने पॉलिटी के सब्जेक्ट्स को कवर किया था और हमने अपना न्यू सब्जेक्ट स्टार्ट किया है जिसका नाम है इकोनॉमी। और हमारी इकोनॉमी की फर्स्ट वीडियो है जिसमें हमने इकोनॉमिक सिस्टम के बारे में पढ़ा और टाइप्स ऑफ मार्केट्स के बारे में पढ़ा। वैसे ही आज हम पढ़ने वाले हैं फर्दर न्यू टॉपिक्स के बारे में। तो बिना कोई टाइम वेस्ट किए स्टार्ट करते हैं। सो in our economy, we divide our economy in three sectors. First one is the primary sector, which directly deals with natural resources, just like for example agriculture, mining and all. The economic activities which takes let me change the color of the ink, which takes the place with the exploiting the natural resources under it: agriculture activities, mining, oil exploration, etc. When the agriculture sector, subsector of the primary sector, contribute minimum half of the national income in livelihood in countries called agrarian. This is not that important, but you have to just remember that primary sector contains directly a sector which directly deals with natural resources. Okay. Now our second sector is secondary sector. It's contain all the which goods which material and which goods we provide with getting from a natural resources and manufacturing in and making it usable for the individuals, or it means basically for example industries manufacturers comes in secondary sector. Okay, it contains all the economic activities under it which raw material extracted out from primary sector, say this, natural raw materials are processed, called industrial sector. When secondary sector brings a minimum half of the national, no, that is not also important. Okay, you just have to remember that secondary sector is a economical activities under which we use raw material which we get from a primary sector and we process it and make it usable for individuals or others. Okay. Now tertiary sector, basically it is a service sector which provide services like education, healthcare, banking, communication and etc. Okay. Now sector of Indian economy. Now we already learned about the primary sector and secondary sector. You can read this and I will read you for you this and you have to read this by yourself also. Agricultural sector is known as a primary sector in which agriculture operations are undertaken. Agriculture based allied activities, production of raw material such as cattle farming, it directly defines that what comes under the agriculture operations like a cattle farming, fishing, mining, forestry, corn, coal, etc. are all undertaken, all in this. Okay. Now we will moving toward the secondary sector, that is industry, we also call industrial sector. In this industrial sector is a secondary sector in which the good and the commodities are produced by transforming the raw materials. Important industries are iron and steel industries, cotton textile industry, jute, sugar, cement, paper, petrochemicals industries, automobiles and small scale industries. Basically it defining you that what are the industrial sector and agriculture sector. Okay. Now moving to our next slide, that is, let me erase all this first. Moving to our third sector, that is tertiary sector, or you can call it a service sector. Basically, tertiary sector is known as a service sector which includes government, scientific research, transport, communication, trade, postal, telegraph, banking, education, entertainment, health and information. These are all the example of service sector, that is tertiary sector, you can also call it. Now This is, you can just read this. This is not that important for your exam perspective. Just you have to get knowledge of which sector is providing with how much of, just like that. India is the second largest producer of the agriculture products. India accounts for 7.39% of the total agriculture products. In Indian GDP, composition of currently is follow as 16% of agriculture and industries, and we in this composition, service sector has more percentage in compared to industry or agriculture. Remember this, okay? And just read it and go through it, and just remember small things, that service sector is more percentage in our GDP. That's it. Okay. Now this is also some points related to the agriculture. Agriculture being the maximum pursued occupation in India, it plays an important role in an economy as well. The share of agriculture has been falling in a country gross income, while industry and service sector shares have been rise constantly. But from the livelihood point of view, still 48.7% of the pupils of India depend on the agriculture sector. This makes the agriculture more important than the industry. This basically giving you the knowledge that agriculture sector is one of the most important sector for India, because still half of the population, more than half of the population, two-thirds of the population are depending on agriculture, basically. Okay. So moving to next slide. Wait a second. Now, agriculture is not only the biggest sector of economy, but also a biggest private sector of country also. Okay, Green Revolution. You know about the Green Revolution, which is M. Swaminathan, which is started by M. Swaminathan. Okay, remember this. If I am not wrong, evergreen revolution and intention of biotechnology had been made agriculture self-sufficient and also surplus production. Aimed at doubling the farmers' income by 2022, the government of India announced the point of strategy. These are some important points which government of India focusing on to enhance the income of the farmers. Okay, first one, focus on irrigation, provision of quality seeds, strengthening the warehouse, promoting value addition, creation of national farm market, mitigating risk of affordable cost, promoting ancillary activities. Okay, now we will discuss one of the most important body of our India, Reserve Bank of India. As you know, he is a bankers of banker, Reserve Bank of India, who are who manage and audits all the reports of banks in our India. Okay, now Reserve Bank of India was established on April 1st April 1935 in accordance to the provision of Reserve Bank of India Act 1934. You remember this, April 1st, 1935. The central office of Reserve Bank was initially established in Kolkata, but headquarters moved from Calcutta to Mumbai in 1937. Osborne Smith was the first governor of RBI. Okay, RBI was nationalized on 1st January 1949. Okay, from before it was not a national bank. After 1st January 1949, it became a national bank and Reserve Bank of and main bank, our head of banks of India. Administration, basically the zonal office and or you can call headquarter of RBI are in for north the headquarter is in New Delhi. For south there has his headquarter is in Chennai. For east Kolkata. For west Mumbai. Okay, now central board consisting matlab it means central board, how many members are there in central boards? First there is a governor. Okay, second 4 deputy governors, and third 2 finance minister representatives, and fourth 4 director of represent local boards headquartered at Mumbai, Kolkata, Chennai and New Delhi. Okay, now 4 governor and 4 deputy governor along with the central board of director appointed by the government of India. Okay, and who is the government of India? President. It means president, appointed by president. Okay, only the Prime Minister who was the governor of RBI was Manmohan Singh. Okay, RBI Reserve. It referred by the name of Mint Street. Mint Street basically means perfect street, perfect way. RBI is perfect way and backbone of all the banks in our India. Okay. Now, function of RBI. Basically, RBI print money. Okay, 2 rupees no more than 2 rupees note. All the monies are printed by RBI, but coins and 1 rupee notes are coins are minted by Finance Ministry, and 1 rupee note created by Finance Ministry. Okay, remember this. Monetary authority. Monetary authority means money control, exchange of money, and basically who is responsible for the monetary policy? RBI. It means all the taxes, all the money related activities and exchanges are held by, or who is responsible? RBI. Main responsible for this is RBI. Okay. Issuer currency. Basically, issuer currency means he can make currencies if there is a need. Okay. Issue a banking license. RBI has power to issue a banking license to make a bank for banks. If someone wants to make wants to create a bank, he must have a license of a banking. Who will give the license of banking? RBI, not Government of India. Okay. Now, bankers of bank. It means, and I already taught you that RBI is a backbone of banks because he managed all the audits, all the reports, all the money related activities of banks. Okay. A banker to the government. It acts as a banker to the government, both central and state. It provides a short-term credit. It means it provides loan to the government when there is a need, and it also provides a loan to the state government also. That's why it's called a banker to the government. Lender to the last resort. Lender to the last resort means if there is a crisis and bank don't fulfill the amount by to his customer, then bank goes to the RBI and RBI give them loan. That is called bankers to the lender of last resort. ओके, इट मीन्स अगर कभी किसी बैंक पे कोई बैंक बैंकरप्ट हो गया तो फिर और उस पर अपने कस्टमर्स को प्रोवाइड करने के लिए कोई मनी लेफ्ट नहीं है तो वो आरबीआई के पास जाएगा, आरबीआई उसको लेंड करेगा सम मनी एंड तब वो जाके फुलफिल करेगा डिमांड अपने कस्टमर्स की. ओके, नाउ custodian of foreign reserve. It means RBI is responsible for all the foreign reserves and foreign exchange basically. So remember this. Who is the custodian of it? Basically asked in your frequently asked in your exams that who is the custodian, who we know known as custodian of foreign reserve. That is your RBI. RBI. Okay. Where I am, RBI is act as a custodian of forex reserve. It means forex reserve. Okay, it administrate and enforce the provision of foreign exchange and management of FEMA 1999. This is not important, but you can read this only. RBI buy and sell foreign currency to maintain the currency exchange of rate of the Indian rupee and foreign currency, keeping the foreign exchange reserve of a country. RBI representing the government of India in the India International Monetary Fund and World Bank, and who will, yes, this one is also an important question, who will represent at the meeting, who will represent India at the meeting of IMF, Indian Monetary Fund and World Bank, that is RBI. Okay, RBI official will represent India at these meetings. Okay, regulatory of economy. It means RBI regulate the GDP and inflation in our country and control it. Okay, he plays a very important and major role in our GDP and inflation controlling. Regulatory and supervisory of payment and settlement. Basically, RBI is responsible for the settlement and regulation of the payments, of large payments, not small payment. Not for a small payment, there are your banks for the big sum of monies. Okay. Banking Ombudsman Scheme. Banking Ombudsman Scheme is basically just there is an if you have a complaint to the RBI, RBI will appoint a official to resolve your problem. Basically, it means that. Okay, so don't make it rocket science. Just remember that RBI will appoint a official to resolve your problem. Basically. Now, publisher of monetary data and other data. It means information related to tax, monetary funds are published by RBI. Development function. RBI also play a major roles in development also. Now, moving to the monetary policy. Basically, monetary policy is that by which RBI RBI resolve the problem of inflation. Okay, RBI. Monetary policy refer to the use of monetary instrument. Monetary is to under the control of the central bank to regulate magnitudes such as the interest, money supply, availability. It means it just generally it means it will how RBI monetary policy. RBI take out its monetary policy when there is inflation. Monetary policies. Basically, monetary policies are those policies which are implemented by RBI when there is an inflation. Okay. Monetary policy refer to the monetary instrument under the control of the central bank, regulate the magnitude such as interest rate, supply money supply, availability of credit with a view of achieving ultimate objective for economy. Monetary policy is a macro policy being laid on central level toward the management of money supply and there is an imbalance between the money supply. Then RBI put forward his monetary policies. I will teach you that which are those monetary policies in next slide. Okay. There are several direct and indirect instruments that are used to implement monetary policy. These are the cash reserve ratio. These are all the monetary policies which are implemented by RBI. Okay. Cash reserve ratio, statutory liquidity rate, bank rate, repo rate, reserve repo rate, open market operation. I will give you a small explanation of these. Cash reserve ratio are those ratios which is a amount which is deposited in RBI by a banks. Basically, RBI gives some guidelines to the banks that you have to reserve some money, some sort of money to me. मतलब बैंक्स को वो एक गाइडेंस देता है कि आपको कुछ अमाउंट ऑफ मनी मुझ पे रिजर्व रखना होगा. ठीक है. स्टैच्यूरी लिक्विडिटी रेट आरबीआई उनको गाइडलाइंस बैंक्स को गाइडलाइंस देता है कि आपको कुछ अमाउंट अपने पास रिजर्व रखना पड़ेगा बेसिकली. और बैंक रेट वो होता है व्हेन आरबीआई lend the loan for long period of time. Okay. Repo rate when RBI give loans to the banks for a small period of time, and reverse repo rate when RBI takes loan from the banks for a period of time. Then open market operation. Open market operation are those when RBI is selling government you can say government assets. Okay. The objective of monetary policy are neutrality of money, stability of exchange, price stability, full employment, economical growth, equilibrium in the balance of payment. Okay. Now credit control measures. This is not that important, but you can go through it. Let me read it, which is important for you. No, not important for you. Now, method of crediting controls. Generally, there are two types of quantitative and qualitative. First, we read about quantitative. There are bank rate, open market operations, valuable cash reserve, and qualitative rationing of credit, direct actions, moral suasion, publicity, regulation of consumer credit, and marginal requirement. Now we will talk about quantitative or general method. First, we will talk about bank rate. Bank rate policy, when I already taught you that when RBI gives loans for a long period of times to the bank. Okay, interest that which RBI exchange long term lending to a bank rate. That's it. This is not important, necessary. You have to just go through it. Open market operations. It in a narrow sense, when a central bank state purchase and sell the government securities. Basically, when RBI starts selling a government securities, or selling or purchasing, basically that's it. Variable reserve ratio, cash reserve ratio, as I already taught you that some sum of money banks should reserve in the Reserve Bank of India. Now repo rate. Repo rate is a rate at which the Central Bank of India, Central Bank of country, lends loan to the commercial bank at a time of, for short period of time, at a time of inflation. Okay, just remember this. Reserve repo rate means when RBI takes loans from bank for a period of time at inflation, when there is an inflation, basically. Okay, call for money market. Now this is not important for you. As I teach you, as I taught you in a previous video, that what is a financial year for a government of India, that is from 1st April to 31st March, and for RBI is April to March. Okay, now moving to our next slide, banking in India. Okay, now we will learn about the banking in India. Banking sector is a backbone of the modern India. As you know, banking plays a very important role in every country. If there is no banking system, they are economically weak, and they are lacking of development, basically. If there is no banking system in a country cannot exist. Okay. Now, banking sector is a backbone of modern business world. The banking system significantly contributes the development of country. The first Bank of India was Hindustan Bank of Hindustan, which is on 1770. Nationalization of, now this is major question. At the time, after we got independent, we nationalized some banks for our convenience. Okay, so that only we don't rely on only one bank. So we should nationalize some more banks to be more prominent and self-sufficient, and it will more effective for our country. So at that time we nationalized 14 major commercial banks on 19 July 1969. Please remember this date. This is important for your exams. On 1969, we nationalized 14 major banks. Okay, this is not that important, but you have to remember this. Okay. Now, commercial banks. Commercial banks are those banks which we can say that private owning bank, private banks. You can say that. But at this time there are less private banks. There are majorly government owned banks, because there are major share of government in every bank. Commercial bank are those banks which earning money by individuals. If I am just depositing my money, he will manage those money and take some charges and earn something from that. That is called commercial bank. Commercial bank refer to a bank or division of a large bank which more significantly deals with deposit and loan services, provide corporation or it will provide you services like loans and credit and withdrawal, but it will charge you something. Okay. Now the primary function of banks, commercial banks, accepting deposit. Yes, this one is a major function, and demand deposit. And now we will learn about accepting deposit in this, in that there is a sub part of in that is demand deposit. Demand deposit is that deposit which we put in our banks, and whenever we need, we can demand for that from bank and he will pay you that money. And now time deposit is money we deposit in our bank, and it is time bounded. It means you cannot withdraw it anytime. It is time bounded. It will only withdraw at a particular time which is given by a bank. Okay, advancing loan, it will provide you loans. Now secondary functions, agency function, collecting checks, collecting incomes, paying expense, transferring of funds, letter of credit. These are the some secondary function of commercial banks. Okay, general utility, dealing of foreign exchange, providing locker facilities. Okay, these are the. Now other function, money supply, it will help you in a money supply increase, so that there is a, you don't have to rely on other things, other banks. It will, I means national banks. Okay, it refers to the one of the most important function of commercial bank that help increasing money supply. That is money supply. Credit creation, it means he will when you put your money in banks, he will just charge you something, some little amount, and he will generate money from that money, how? Just for example, if जैसे कि you deposit some amount of money in banks, then he will buy some, the bank supply that money in their supply, in a money supply chain, and earn money from and earn interest from that money. That's how a bank works. It means in that money he will give loan to someone and earn that interest, earn interest from others, and that earned interest is money created by for himself, and he sometime he will give you that interest, and he will also give you interest on a money which you deposit in your banks also. It means a money which you deposit in banks, he will just put that money in a money supply chain, and then he will earn money from, he will earn interest, and he also provide you interest, small amount of interest, and big amount of interest always for himself. Okay, now now RRBs are regional rural banks. We set up RRBs for our rural developments, okay, so that they don't feel left out. That's why we set up regional rural banks, which are headed by NABARD. Okay, regional rural banks were set up on 2 October 1975, only 5 numbers. RRBs were established based on recommendation of Narasimha Committee. Please remember this. Banking related, by whom recommendation, whose committee recommendation we established RRBs, that is Narasimha Committee. Okay, RRBs were first set up as a regional banking based rural lending institution under the Regional Rural Bank Act 1976. The Government of India concerned the state government and the sponsoring nationalized banking contribute the share capital of RRBs in the proportion of 50%, 15%, 35% respectively. The area of operation of RRBs limited to notified few districts. It means there are RRBs only for small areas, not for big areas. Big areas there are different banks, but RRBs established basically focused on small sectors or privileged sectors basically. Okay, first RRB, Prathama Gramin Bank. Okay, now that's all for today. We will learn about next slide from tomorrow. Let's meet tomorrow. That's all for now. I'm taking a leave now. Thank you.